Hey guys, how's it going? Value Venture Investing here today. So if you're like a lot of people, you're asking the question right now, why is Apple going up off seemingly pretty terrible earnings? Yes, Apple released their Q1 2023 earnings, and at face value, they seem to be a terrible quarter. But I've been making this video for you guys here today to show you why it's actually not such a terrible quarter, and actually more specifically why the stock is responding the way that it is. So I'm going to give you the quick overview of the financials, the different segments, iPhone, iPad, all that. There's some pretty good stuff on the conference call, and then we're going to go through the financial statements after as well. So yesterday when it released earnings, at first it was tanking. And then today, of course, we were up about 2.44%, while a lot of the market was down. So a lot of people are like, what is going on? This is rigged. This doesn't make any sense. Actually, it makes complete sense to me. And we're going to get into that. But first, let's talk about the quarter itself. Revenue was $117.15 billion. Now, estimates were $121.14 billion. So pretty significant miss there. Earnings per share, again, $1.88, and it was expected $1.93. So another pretty big miss. Cash was $165.45 billion. They're planning on getting net cash neutral. I believe their net cash is around $60 billion right now or something like that. So they're trying to get net cash neutral. iPhone revenue, there's some specific reasons why this is what it was. We're going to get into that soon. But it was $65.77 billion. Now, estimate was $68.3 billion. So pretty significant miss there on one of their most, if not their most significant product. iPad revenue, 9.39. It was actually a beat. Estimate was 7.78 billion. Now, the reason for this, because the previous quarter, or the previous year that we're comparing this to, we had some pretty significant supply chain issues. So that's why I guess analysts kind of got it wrong. It was stronger. Mac was a pretty big miss, 7.73 billion versus an estimated 9.63 billion. But this was because of a pretty tough compare with the M1 Max coming out. So we'll get a little bit more into that as well, but it was a very difficult compare. My favorite that I've said all along is going to be the savior, essentially, the Apple's services revenue was actually a beat, over $20 billion, $20.76 billion. Estimate was 20.47, so it's a little bit of a beat there. Wearables, home and accessory, 13.48 billion versus 15.32 billion. So pretty huge miss there. Now let's go to the explanations for what actually happened this quarter and why a lot of people are confused. First off, this was a 14-week quarter, so that's not great news because I had a little bit more time in this quarter. So on face value, that is not the greatest fact right there. However, impacts to revenue, okay, because we had a pretty significant miss on revenue here. One of the biggest ones they're saying is foreign exchange headwinds. Now, these are pretty significant, 800 basis points. That's like 8%. And this is something that they mentioned before. Macro, as we all know, the U.S. is in a recession right now. Things are getting kind of ugly out there. And supply chain constraints. I know they've been using that supply chain constraints excuse for a while. But specifically, they're saying their 14 and their 14 Pro Max, which have the higher ASPs, average selling prices, were significantly impacted. But they said when they're talking about a constant currency basis, they referred to that a lot, so they didn't have these headwinds. If it wasn't for these headwinds, revenue was roughly flat. Because one thing I didn't mention was this year over year, that's a 5% drop. And that was kind of the headline number. Apple, 5% revenue drop year over year. All right, but if we look at constant currency basis, they're roughly flat, which isn't great, right? But look at the economic times that we're in right now. The iPhone was roughly flat on the cost of currency basis, but actually they grew revenue. Sorry if I misspoke there. They grew revenue on a constant currency basis. So sorry about that. They actually increased revenue if it wasn't for these headwinds but the iPhone was roughly flat. So take that for what you will. Maybe not the greatest that the iPhone was flat, but revenue on a constant currency basis grew. They now have more than 2 billion active devices in an install base. They call it active install base devices. So this is the really important thing about them, especially when we're looking at services. I believe the last time that they gave this information, it was 150-ish. They talked about this on the conference call, billion, I wish, million users less, so that's great. And many of the segments are record all-time high install bases, right? So that's great for establishing this ecosystem, especially when we're going to services and these types of things. Now, guidance, again, before we get into the guidance for next quarter, I'm going to give you a little explanation. I brought up a piece of paper here. Last quarter, what they said, total year-over-year revenue to decelerate in the December quarter. What happened? 5%. Why they said? Because of foreign exchange. Exactly what happened. Mac is going to be going down because of a hard compare. Exactly what happened. And services are expected to grow. So if you're wondering why the stock is responding the way that it is, this is a prime example of it's already priced in. The stock responded after last quarter because of the guidance they gave, and now there's no new news, right? So this is like, if you don't know this about the stock market, it's always forward looking, right? It's always looking to the future. It's not looking to the past. This was already known. This was already baked in. However, once that's baked in, what's going to happen going forward? Like, because we're always forward looking, right? So again, they didn't give guidance, but they said year over year is going to be similar to the December quarter for next quarter. So that's going to be an acceleration. The foreign exchange is still going to be a factor, not great, but the iPhone year over year is going to accelerate. So that might be why you saw a bit of the gain today. iPad and Mac is going to decline double digits year over year. That's the not great part. However, they keep saying because of these hard compares, I'm not too sure about iPad, but Mac specifically, you see all the massive changes they've been making with the M1 and then now the M2 processors. Their own silicone is going to be an amazing competitive advantage for Apple going forward. But when you come out with all that much stuff at once, yeah, I mean, it might take a while to beat those kind of comps, right? So in my opinion, and I'm pretty sure I'm right on this one, this forward guidance is why we saw the stock go up a little bit. The rest was already baked in. So it's pretty simple. I know a lot of people are confused about it. Like, this was a terrible quarter. Why is this going on? Well, that's why. It's pretty simple. So let's take a look at the financials right now really quickly. Okay, so taking a look at the income statement here. Of course, we have the products, 96 versus 104 year over year. So that's that 5% drop we saw. But okay, there's our services there at 20.7 billion versus 19.5 billion a year ago. So we saw a nice little increase there. So total net sales of 117 versus the 123.9 a year ago. Research and development is still going up, which is good. SG&A is getting more expensive though as well. So I'd like to see maybe them rein that back a little bit. So you also keep in mind that their total operating expenses were actually quite a bit higher than a year ago, right? So it's 14.3 billion this quarter. It was 12.7 billion a year ago. So the net income was almost $30 billion versus 34.6 a year ago. Our diluted EPS $1.88 versus $2.10 a year ago. If you look at the net sales by reportable segment, of course, we were down in every segment. If I look at them, 51 to 49, 29, 27, 25, 23, 7, 6, 9, 8 to 9, 5. Yeah, we were down in every segment. So that was something that really was not great. Net sales by category, we did see a couple increases. The iPad here was 7.2 billion last year, same quarter. It's 9.39 billion this quarter. Services, again, we saw pretty significant growth. It's still growing. 19.5 billion year ago quarter, 20.7 billion this quarter. Looking at the balance sheet, only thing I want to look at here again is what they have in cash and marketable securities. And that's what I said there, the 165.45 billion when you add those up. They pay down a bunch of debt, a couple other things like that, but nothing too interesting. In terms of the statement of cash flows here, I found it kind of interesting. Under investing activities, they definitely purchased less marketable securities, and they definitely had less proceeds from marketable securities, as well as proceeds from the sales of marketable securities. So the cash used in investing activities, they use a lot less than a year ago. So the increase or decrease in cash and cash equivalents in this case was about $3 billion. So their cash and cash equivalents, restricted cash and ending balances was $21.9 billion. So what am I doing? I'm doing absolutely nothing. Apple, of course, is the biggest, as you know, the biggest portion of my portfolio, but at a PE under 30, if it wasn't, I would be buying on any kind of dips. Personally, I'm not going to be buying anymore. I don't know exactly what's going to happen with the stock because the market's just kind of a little of a confused mess right now. But the quarter was definitely very misunderstood and could have been much worse. But I'd love to know what you guys think about the quarter. Leave a message down below. Don't forget to like the video. It's great for the channel, guys. And that's going to be it for today. I'll see you in the next one.